Well, hello and welcome and good evening, everybody, on tonight's presentation. As you see, this is a very special presentation tonight. My name is Claudia Eifert and I'm your host tonight, and I have with me here four wonderful men. Some of them I know very, very long time. Some of them I know a few years back, but certainly it's a very great pleasure and great honor to have Philip Judge on the call. The last time we shared the screen, the webinar and places was probably in 2012 or 2011. So it's a long time ago that Philip came aboard. It's fantastic to have you here, Philip. How are you?
Very well, thank you, Claudia. Hopefully you can hear me okay.
I can hear you excellent. I understand you are in Dubai.
Correct, in Dubai, which is getting very hot now, but yeah, lots of things going on here. So it's a great privilege to be on the call this evening.
Fantastic.
Or today.
Fantastic, thank you so much. And we also have on the call, of course, here Ryan Messer and Randall Eddington. Hi, Ryan and Randall, how are you guys?
We're great, how are you doing? Thanks for having us on the call.
Yeah. Looking forward always to your great information. I know you're going to share some amazing information tonight. And of course, we have our founder and CEO of Utopia Global, Bill Rowell, on the call. Bill, how are you? Are you also in Dubai?
Hi, Claudia. Yes, I am in Dubai with Philip and Simon and Damien. Had some great meetings with them the last couple of days. And welcome to everyone joining us. Looks like we've got people from every continent, so even early hours in Australia. So welcome to everyone joining us on this particular call. And Philip, you may just have to mute yourself until we get you going, because there's a lot of feedback there.
Well, thank you. It's really great, you guys, to have you on the call, because I know a lot of people are really expecting and waiting since a long time, especially to hear from Philip, especially to learn about the project in Peru, Ecuador, what he can share. And of course, he has a long experience in these projects. And of course, everybody wants to know about the plastic recycling. We have been talking the last few weeks, so we're going to touch on that as well with obviously Randall and with Ryan here. So really excited for that. And Bill, the floor is yours.
Well, thank you, Claudia. I must say it's really a wonderful milestone having Philip Judge joining us on the call this evening. I really appreciate that, Phil. I've known you many years, and if I look at my business life, my business career since 1986, and you've been an entrepreneur for a very long time also, you meet people in your journey, and some people have a major effect on your life. And I've got to say, you're one of those guys. Now, when you meet people, of course, people can have a negative effect in your life, and some people have a great effect in your life, actually changing, life-changing. And I must say, Philip Judge has had a life-changing, positive effect in my life. First, I'm going to spend a few moments just telling the story how I first met Philip, and of course, his partner, Simon Heaps, who were the founders of Anglo Far East Bullion Company. And how they, from that meeting, eventually led me to meet Ryan Messer, the CEO of STOR, that's on this call as well with Randall. And you just see a slide come up here now. Actually, you see Philip Judge on the left-hand side. You're seeing Ryan Messer. I know the number 3 guy is from Perth, Western Australia. On the far right-hand side is another Australian up north of Brisbane, I believe, Justin Pettit, actually. But anyway, when I first met Philip, and Philip will recall this very, very well. I met him in Zurich, Switzerland. I went there because I was looking at doing an investment. In fact, I just sold my last hotel in Melbourne, Australia in 2004. And we were meeting at the Grant Thornton accountant's office in Zurich. And as I walked into the boardroom, I first met Philip. I spoke to him on his phone. I spoke to his partners on the phone. Instantly just connected to their energy, and the dialogue was very, very contrarian and very different than other people that ever spoke to me about investments. And when I went into that room, Philip's first comments basically were, to me, we only invest in products from the earth. And to me, that was really life-changing, because we just came out of the dot-com boom of the 1990s, and I was probably investing in everything other than assets of the earth. I was buying a lot of, I suppose people in the crypto world could actually relate to it today, a lot of assets that were backed by zero, backed by nothing, or just ideas. And these assets, even during the dot-com period, they were pumped up in price, and until the market shifted, it falls very, very quick. And of course, those shares that had no underlying asset value or utility basically collapsed and the prices went basically to zero. So those words that Philip shared to me in our first meeting were really life-changing, got me thinking. And I realized he's a deep person, he's a historian, and I've known Philip now since, well, it's going on 15, 16 years, and we've been to many parts of the world with each other. Anyway, after he introduced me to the world of precious metals, he actually asked me, what is money? Now, I've owned 4 hotels. I've dealt with millions of cash flow running these hotels, but no one in my life had ever asked me, what is money? And that really led into the precious metal discussion. I won't go into that now because many of you know the story. But he then introduced me to an energy fund. And of course, as we know, the world needs energy. In fact, energy today has transformed the way that we live today. I mean, the last 100 years has really transformed the quality of people's lives around the world, and energy is even in greater demand. Anyway, I decided I liked the team, but before I invested, I wanted to actually meet the people who are actually managing the natural resource assets. So we flew over, myself, Philip Judge, Simon Heaps. We flew over to, I think it was Baton Rouge, Louisiana, Ryan, and we spent some time over there and walking across the different wells and gas heads, etc. And most importantly, what I liked was the team. And in fact, Claudia, maybe you want to go to the team slide, because I always believe success in business is a team. In fact, when you look at your life, success in life is the people around you, isn't it? In every area of your life. So when I went there to meet Ryan and I met the team, and you see Philip on the right-hand side, you've got Randall on the call who's in the middle, and of course you have Ryan on the left. And on the bottom left-hand side, we have James Stewart, who was the geologist who I met back then in 2004. Philip knows him very well also. And he was also just recently on the Houston visit as well, when we were at the Texas asset. So to me, when I met this team, the deal stacked up for me. Good quality people, professional in their field. The assets were owned by, just like the Texas asset, I mean, there's over 90% of the industry experts own the assets in Texas that Ryan had vetted and closed on. So it's a very, very exciting time. But maybe I'm going to pass the call over to Ryan before we pass it on to Philip. And Ryan could actually share a bit of information how he got to meet Philip Judge and his business experience, because you see a photo there of them out the front of New York Stock Exchange. So we're getting into some pretty serious business there. We're talking about running public companies in the biggest stock exchanges in the world. So with that, Ryan, I'm going to pass it over to you, and then Philip's going to come on. We're going to talk about some of our projects that we're looking at for the future.
Absolutely. Thanks for having me on, Bill. It's a great pleasure to be here. It's great to see Philip there on the call, which is fantastic. Good to see you, Phil. We go back a long time. I mean, it goes back to 2003, 2004, and really Philip approached us. I mean, we had been in the energy space for a few years at that point, and him being in precious metals and, assets related to investments around, earth products, it just made perfect sense. And so Philip started an energy fund, the Anglo Energy Fund, and we partnered up and became sort of the management company for that fund back then. And that was around the time that the price of oil had moved. And when I got in the business, it was under $20 a barrel. And around 2004, it really started to climb. I think the price of oil was over $40 a barrel. And so all the metrics around what we were doing and buying production all changed, right? Because institutional money really flooded into our sector. And so we figured it was a lot cheaper to actually find the reserves with a drill bit by drilling and exploring and taking that risk than it was to buy the production. And it turned out to be right. We drilled probably 140 wells within a 2-year period of time and ended up selling that production and did some gas projects and various things. So our relationship with Philip goes back a long ways. We've done a lot together. Philip actually just fantastic friend and business partner, as you said, a deep thinker, and has been a huge asset for us, not only for our companies, and he sat on our public company board for a while as well, and vended in some assets to the public company, but also as a friend. So it's my great pleasure and honor to have him on the call. And this whole project that we've got, STORE, which really embodies natural resources and doing good around the world, played perfectly into other projects that Philip have been partnered on and been involved in for probably as long as I've been in the energy sector alone. So so the marriage was absolutely perfect. And what we're doing now is it's going to be a game changer for everyone involved, and of course the people around in the communities that we're going to serve. So having said that, I'll introduce Philip, and maybe we can talk about some of the things, and maybe Phil, maybe a little bit about yourself, and then sort of why you found what we were doing with STORE intriguing enough to sort of bring your projects in, because obviously they're a perfect fit. Muted.
Okay, so it seems like I'm unmuted now. Yeah, thank you, Ryan, for that introduction, and Bill. And of course, I think the key to any discussion over business really comes back to team. And so for me, I'm thrilled to be here on this call today. And of course, the relationships have gone back so many years now. I mean, we're talking, you know, coming up 20 years, both in the case of Bill and yourself, Ryan, and of course the team and the infrastructure of people which surround us for close on 2 decades now. And for me, my history really goes back to specifically precious metals, gold and silver, which is really a 3-generational thing. My grandfather was a very successful businessman in East Africa who ran a successful gold mine there in the Rift Valley, and that kind of passed down through the family line to myself. And in the early 90s, I became involved in the physical custody of gold and silver. But at the same time, in this industry, and you know, of course, in today's world, we see a lot more awareness of what the gold and silver industry has done. Now, we can go back to the discussion about, well, how gold and silver is money, and I think many people on this call tonight today would be well aware of, I guess, what we've spoken about for decades, which is where that, you know, fiat currencies and so on, we can go into all of that. That's another discussion. But really, at the end of the day, in terms of real tangible wealth, money really comes back to gold and silver. So you can take that on one hand, but then on the other hand, you can see what the mining industry has done to both the environment and communities for really, if you go back to the history, you can take this back to ancient Egypt, you can go back, 5,000 years or more, and you can see that actually the gold and silver extraction of the mineral from the earth has been devastating both to usually local communities and also the environment. So for some time now, and you know, Bill and myself and Ryan, we can take these discussions back 10, 15 years of how do we produce a precious metal, a mineral, but do it in a way that, you know, a lot of this goes back to the big corporates. You know, the vast majority of gold and silver that's mined in the world today is done by large corporations, and they do it in a very specific way. And I think our approach for the last 15 years has been, how do we create an environmentally and socially sustainable way of making a profitable extraction of these precious minerals from the earth. So this has been a passion of mine for many years. And so really today's call for me is thrilling to be on the call with my partners for so many years, based on the point where we're now coming to the point where we can see a road forward to actually achieve a goal that we've discussed for maybe 15 years or something like that. So I guess that's some introductory comments there.
It is, Philip, and you're telling me last night, of course, that you have 3 generations of business starting back in East Africa, as you just said. But let's, many people on this call, of course, they're all involved with STORE. They're STORE owners. They're actually equity owners in assets that we're purchasing. And of course, you have a passion in, as you just spoke about, on the environmental passion about reclamation, damage done by mining, whether it be mineral mining or whether it be in multiple forms of mining in one sense. So why don't you tell us about the different projects and how many years have you been studying these? And maybe on the last slide, Claudia, you can go back to Robin Slaughter, because he's a very important part to this whole project of this mineral reclamation, isn't he, Philip?
Yeah, so it's interesting that when we were doing the introductions a little bit early, we were talking about how much of this started to happen in 2003. Ryan and myself were working together in 2003. Yourself and myself met in 2003, Bill. And it was funny, I was flying on one of my I think it was my first flight to Panama, from Los Angeles to Panama City, Panama, the Republic. And again, it was 2003, and I was in business class on a midnight flight to Panama. And there were 3 people in business class. And when the girl came out and asked this gentleman who was sitting across the aisle from me, what would you like to drink? He spoke in a very Australian accent. And so and it's very rare on a flight from Los Angeles to Panama City in Central America, you'd hear an Australian accent. So I jumped up to the next row, which was empty, and I said, hey, hello, my name's Philip. I grew up in South Australia, and he was from north of Brisbane. And we started talking about what we did, and he said, well, I've been, a mine engineer. He has a metallurgy background and chemistry and certainly very, very strong in geology. So we're in the same industry, although I was in physical gold and silver custody, but he was in the extraction of the mineral itself. So that was 2003, and we became firm friends from that point. Now, what I've loved about Robin is the gentleman in his 70s that's been around the industry for decades, since he graduated from university. And what he's amassed over his lifetime is a team of long-term relationships of people that kind of compensate his knowledge. So, I'm talking about the best, highest class engineers, metallurgists, chemists, and so on. So again, this comes back to team. What I'd be thrilled to do over the next several weeks is bring Robin onto one of our calls. So Rob and I have talked for many years about Cerro de Pasco, which I know we've spoken about with Store. And in more recent days, we've been looking at how can we cash flow up or rack up what we want to do with Cerro de Pasco in the longer term with a short term but highly profitable, socially, economically sustainable project. So this has brought us to what we are calling our Ecuador Pacific project, which is something we've been working on actually for some time now, a couple of years, but it is going to be for us a very good option with Store to bring in a faster cash flowing project that provides us with all of the social and economically sustainable hydrometallurgical processes and a lot of logistics and infrastructure which we can bring to market far quicker. So that's for us quite exciting, and depending on how much detail we want to go into tonight, I'm happy to discuss it.
Well, just basically, Phil, I'll just point out why the project in Ecuador, which is you've been looking at that for the last 2 years as well, why it will probably come to the table before the Peru project is that Peru is actually at 13,000 meters. So with that alone, of course, it brings a lot of challenges and much more or higher overheads to to build the infrastructure. To extract the minerals from the Earth's crust. Also, of course, being able to transport it from there back down to a reasonable level to be able to ship it to where it needs to be for deportation, etc. So that's one of the main reasons, I suppose. Correct?
So to really discuss this, first of all, the majority of gold is recovered from ore and big companies. Now, most of the gold production done in the world today is multi-million or billion-dollar gold companies that are publicly listed. Generally speaking, they're not innovative. They are concerned with their share price. They're not looking to provide dividends or yield back from production to shareholders. They will tend to maintain a long-term operational mindset, meaning that they won't be fast to implement new technologies. Now, typically speaking, a large company will go in and look for a large resource over many, many, many tons of ore which is extracted from the earth. Now, extracting ore, or rock, hard rock, if you will, is very, very expensive. It requires a lot of energy in, but hard rock is basically taken from the ground that may yield 5 grams, 2 grams, half a gram. South Africa, we're mining at point something of a gram per ton. So you're extracting tons of ore or rock from the earth. And then what you do is you put it through a cyanide leaching process. So basically, you crush all this ore that comes out, which is very, very energy intensive. You crush it into a powder and you put it in a reactor, you put cyanide in it. And cyanide requires oxygen to leach the gold and the other minerals that are held in suspension with the ore. So what you're talking about here is huge energy in for very low returns, which done on a multi-billion-dollar scale provides the company with some profitability. The thing is with what's happened in the mineral recovery sector over the last 25, 30 years and more, like anything, like the internet, like any of the technologies, is that there's been major innovation, and a lot of this is on a metallurgical and a chemistry level, which means that basically it's kind of a lot of new to market technology that's not adopted quickly by the large companies. And an example of this would be if you put a cyanide ore compound into a reactor and you inject it with oxygen, suddenly you're going to produce a larger recovery of the actual gold and silver that was held in suspension within the ore itself. So if you go around any of the major, whether it's South Africa, but definitely Cerro de Pasco, and the same applies to Ecuador or anywhere else, where these large companies have been producing ore for a few grams a ton for 50 or more years using just standard reactor processing for the metallurgical recovery process. What they haven't done is adopted some new technologies, so therefore their recovery can be 20% of the actual existing mineralization of that ore. But by using modern technology, you can take that to 70 or 80 or more percent. So a lot of the plays that we're interested in, that Robin's been looking at for decades now, is to go in and one of the ways to bring yourself or to lever yourself into a large play is to come up and clean up some of what was the previously worked ore, which we call tailings, which means that, let's say you have a lot of tailings from an old mine that was worked and you recovered 15 or 20% of the mineralization. You go rework it with new hydrometallurgical reactor processes. You can suddenly now recover 70, 80% of what the mineralization that existed within those tailings that was never previously recovered. So part of the business model is to take control of strategic assets that provide high mineralization at a low access cost, and then rework the previous tailings that were worked in the past using traditional methods of recovery with modern technologies to extract. So basically with tailings being the ore that was taken out of the ground, extracted sometimes hundreds or thousands of feet below surface level at high cost, as we've discussed, worked, pulverized into a dust, put into a reactor, and they've recovered 10 or 15 or 20% of the mineralization, rework all of that and extract the remaining 80% or whatever it happens to be, which gives us a very fast high cash flow rack up, which then provides us the ability to reinvest into the asset.
It's truly exciting, Philip. And at the same time, of course, you're also, of course, it's a land reclamation. You're taking what's been damaged and repairing that, but also, of course, the water supplies, all the damage that's been done. I mean, you're actually helping the villages in these regions too, correct?
Well, so one of the exciting things, one of the unfortunate things that provides an exciting opportunity is that in Latin America, a lot of the large companies that have been active within places like Ecuador, certainly within Peru, and the history of Peru goes back to the Spanish conquistadors from the 1600s, where it's interesting, the history of the Spanish Empire was built on the silver from Cerro de Pasco. But then by the time that we got to the 1800s, we were using cyanide leaching. And certainly as we moved into the 20th century, some of the large majors that came in did not really care about either the environment or the local community. So what they would use is cyanide and so on, and you'd end up with a lot of lead as a byproduct. And all of this has really, first of all, it destroys the local vegetation. Secondly, it's dumped. So these tailings get processed in reactors with things like cyanide and mercury, and we've heard about mercury leaking into the Amazon basin. And generally speaking, these companies will work their ore, and then they'll just dump it in the ground. And then what happens? It rains, and then that naturally flows into the water tables that feed cities below. In the case of Ecuador, where there's been prior workings in this very prolific area that we're looking at right now, it feeds into shrimp and trout farms, which are a big export product for the country. There's a very interesting geological play or story in the whole Ecuador project, which we can discuss. But one of the biggest problems is water pollution, which is basically a circle. It goes back. So, people downstream from where these mineralized areas were end up drinking groundwater that's got lead and cyanide and mercury in it. And so part of what you do when you go in and rework an old, heap leach, for example, is you clean up the area. You actually literally remove the toxic minerals and chemicals that were left in that area, and then you go back in and you reforest, based again on the local environment. The other thing that's very, very important in mining, of course, is the huge energy input, which is why I'm so excited about plastic pyrolysis, which Ryan and I have been talking about, is by bringing sustainable energy input to projects like this. And this could be oxygen, hydrogen separation, and there's a bunch of different things that can be done. So it just opens up a vast array of different technologies that can be brought to market in a very profitable way, Bill.
Yes, it's exciting, and of course, contractually, the cleanup would be part of that process as well. Well, let's speak about the plastic pyrolysis, because I know that yourself, on your wonderful farm that you've also got, Philip, have been researching this for many years. Here we are both drinking out of plastic bottles, Philip, and there's hundreds of thousands of metric tons of plastics produced, each year around the world, and certainly Latin America, traveling around there, has its fair share of plastic waste, as many other parts of the world does as well. But we can monetize this, of course. So again, we're doing environmental cleanup, and maybe we'll bring Randall on here, Ryan, and yourself, because we're going to move away from the mineral extraction of Philip speaking about, and speak about another extraction. And you're very much involved with midstream, Randall. I think you do something like 9,000 barrels per day, which is pretty significant. And maybe you want to touch on what that means. And then, of course, what would you do with that different gravity or those different crudes or oils that you have, what you actually do with the plastics, and is there a market for it?
Yeah, absolutely. So, right now we take a similar byproduct that comes from natural gas. It's stabilized, and that's kind of your blend stock. You use that as blend with some other different variations of crude. And what this pyrolysis does, of course, is it makes almost the exact same product. When you look at it, an analysis of it from item to item, it looks the exact same. It blends the exact same, but the biggest change there is that, one, you're helping the environment, which is, I think, obviously huge. But two, you drive your margins up 50 to 60%. Again, that's first or secondary to the environmental cleanup part. It's a great markup. and we can use it. We can utilize that stuff. We have plenty of markets for it. Matter of fact, the more the merrier of this type product for us.
Well, the profits are actually key. I mean, environmental cleanups aren't done because the profits are not there or haven't been chosen to invest back into cleanups. So by having high margins like 60%, which is a great margin, part of that will be taken back in as part of the cleanup process, which is really exciting. But for people on the call, I mean, maybe Philip wants to jump in here because I know that you've built one of these machines, I suppose. What do you call it, Philip? A converter or something? It extracts the carbons from the actual plastic?
Well, yeah, well, it's I'm no expert on it, but I did a prototype of a reactor, and basically what you're doing is plastic is a long carbon chain. Where's my thing? It's a long carbon chain, and which comes from hydrocarbons. And so what I like to do is always if you think of ice, water, and steam, and what we do, we extract crude oil from the earth, and through a reactor process, we create a longer carbon chain, which becomes solid. So it's almost turning water into ice. So the concept with plastic pyrolysis is to put a solid hydrocarbon into a reactor in an oxygen-deprived environment, heat it to a high level, and it cracks the molecules. It cracks the chain of molecules, which could be, in the case of a plastic bottle, maybe 32 or something molecule chain of a hydrocarbon chain, and it cracks it back down to, if you again take the metaphor of water, it will turn it into steam. It vaporizes or gasifies it. And then through a condenser process, it turns it back into much shorter carbon chain molecule, maybe 2015 carbon chain molecule, which is basically like heavier than the kerosene. And this is where I'd have to refer to Randall, of course, and Ryan. But it's basically taking a solid hydrocarbon and creating it into a liquid that can be used in a fuel. Now, the proponents of plastic pyrolysis would say, well, this is a great thing because we're going to use liquid fuels anyway, which obviously we're not getting rid of hydrocarbon liquid fuels anytime soon. But what we have got, and if you go to a place like Panama City or Panama, the Republic, you look at just the sheer plastic waste flowing down rivers, on the side of the road, on the beaches. We all understand the problem we have with solid plastic waste. And depending which chemist you speak to, they'll say, well, this is going to take, 2,000 years for that to break down, if it ever does. And so what we're doing here is there's no time soon that we're going to get rid of the use of plastics in our modern lifestyle. But what we are doing is we're disposing of it sustainably in a way that we're going to offset the hydrocarbon input for fuels, which again, I'd go back to Randall and Ryan on that. Now, what's interesting is that much of the European Union are very excited about the fact that they've eliminated plastic waste. But when you look at that, a lot of that is incineration. Now, they use a clean incineration process where they're injecting oxygen and other things to try to reduce the effects of the incineration of the plastic or the hydrocarbon itself or the carbon. But at the end of the day, you're producing carbon dioxide. And, climate scientists would say carbon dioxide emissions are what's creating climate change. To me, plastic pyrolysis is a net sum game. In other words, you're taking hydrocarbons that have been produced into a product, you're going to input the energy back into the furnace combustion of the reactor, and you're going to end up with a fuel output. So to me, it's a beautiful technology. And then if you talk to Randall and Ryan about when you're mixing with heavier crudes and so on, it becomes a valuable asset. So to me, it's an exciting thing that I've had a passion about for something like 10 years now.
And if done correctly and if engineered properly, the emission gases can be reused as fuel. So really, you're at a zero emissions type of solution when you're taking plastics back to fuel now. So we're on our probably 4th, 5th gen of the technology around pyrolysis. It's been around for a couple of decades now. People have been doing this with various types of plastics and tires. The interesting thing is, you know, we all realize that our psychology is changing. I mean, everyone's seen the commercials about plastic. Everyone's seen the ads maybe on Instagram or Facebook. And so we're all exposed to the issue. But having said that, we're still only recycling 7% of all the plastics that are out there circling around in the oceans and on our shores. So the problem is massive. And just like you said, Philip, your point is absolutely valid. All you're doing is taking a hydrocarbon, converting it to a usable product, and then converting it back into the fuel, which essentially goes right back into the market. So really, you're putting negative pressure on the hydrocarbon industry, which is a good thing overall, right? So what we're doing is very sustainable. And on top of that, STORE is uniquely positioned because of the proprietary process that we have by way of taking that fuel that would normally get sold at a discount and adding more margin to it by blending it with other discounted products to receive a sort of at spec barrel, if you will, which would receive a premium. So through our sort of, and you'll see this soon because we're about to update the white paper and the website and a few other things. We'll be announcing, I guess, the basics around the pyrolysis system and what we're going to be doing. First, we'll be launched in the United States through our Polystream proprietary sort of process that we're going to be using, which is around distilling the right types of plastics to create the right type of fuels to blend with heavier crudes, solve this problem. So this is going to be a big value add for STORE, especially kind of in our midterm here. You know, we've acquired our first asset. It's going to be generating revenue day one. Philip spent a good amount of time talking about Peru and Ecuador, which, you know, Ecuador is a bit more near term, Peru probably a little bit further out, but what's going to provide that balance for our shareholders or our token holders over the next sort of 12 months. And this is a big initiative for us. And Philip, I'm sorry, Randall's working quite a bit on the market and how we're able to sort of build out one of these facilities and where we're going to put it. So
yeah, we've been testing and analyzing the different products that come from, you know, existing pyrolysis plants. What can we change? What do we want to see as an end product so that we can blend it better? So we've been doing it quietly behind the scenes. I've got a dozen analysis on all different types of products, how they're going to look together. So we've been working on it for a bit behind the scenes here.
Brilliant. I love it. Well done.
excellent.
Okay. No, it's truly exciting, and I mean, everyone on this call here today are here for a reason. They want to make some money. Okay, so we talk about there's always a balance, isn't there, between the environmental side and profitability, but actually they go hand in hand. To be quite honest, the more money you make, the more you can put back into the environment, of course. But what I love about this whole concept of STORE, Ryan, and we've discussed this, and even with Philip, of course, and Randall and everyone, is the diversification. We're engaged here with multiple sectors. By owning a STORE token, by owning a STORE equity token, which is underlying ownership in an asset, Source Rock Energy Partners, which is a Texas company, you're actually owning a diversified different assets. Natural resources, of course, which many people have visited the Houston asset. Oil and gas, of course. We have the midstream that Randall's already involved with you, Ryan. I think you're doing 9,000 barrels a day in one sense of so-called blending. I don't know much about it. We have the facility of being able to add plastics to it, increase the margins up to 60%. So those margins there will always compensate when you're having fluctuating oil and gas prices. Would that be correct?
Yeah, margins are great. Matter of fact, you know, when prices are kind of driven down, it puts a little more stress on certain barrels, so it discounts them a little bit further. So it kind of puts them in a position that they're a little distressed and need a place to go. So absolutely, margins though. I mean, they are set, at least set to a bottom. You know, we have a floor. There's not much of a ceiling, but there is a floor, so we are in a good position.
And of course the diversification is really important. And then of course we have the forthcoming projects. We have cash flow generating products now, which we're going to expand on, increase that production in the Texas asset. I think it's doing like 800 barrels a day now. Is that right, Ryan? And we're wishing to increase that to 1,000 barrels a day. They're starting drilling at, I think, the end of next month, correct?
We might be drilling towards the end of this month. But we've got 2 wells slated. These are direct offsets to existing production, of course, and so we have multiple targets. But you're right. I mean, when you talk about diversification, the field that we just acquired, and I know we kind of moved on past this in this particular webinar, but this is a field that's been around for decades. It'll be around for several more decades, generating cash flow for all token holders. This field produces over 800, well, around 800 barrels a day. It produces out of about 90 to 93 wells in the field. So you think about that from a concentration risk perspective. You know, if one well goes down, you're not going to feel it. And that's one of the main reasons why we love this asset. We've been tracking it for a long time. Me personally, 7 years. So it's extremely exciting having now gotten to the point where it's now going to be an asset of store and generate a fantastic foundation for the company for us to expand on and do sort of more high return, high growth projects like plastics to fuel and of course mineral recovery and land reclamation out in Ecuador and in Peru. So
yeah, and the other thing I'd like to say is that of course these projects take time. And this is what I want everyone to understand on this particular call, and we say this probably every call. Number one, don't put more money into store than you can afford to put in there. There's no need to do that. Everyone can balance. Managing your risk is really important. There's no need to put your family or yourselves at financial risk. Number two is it's going to really the next 12 to 18 months are really important. Is a really important period for the development and growth to increase the actual production and revenues of these particular assets. Is that correct, Ryan?
yeah, that's right. I mean, you're talking about a field that we're going to be drilling in for at least a couple of decades. So it's going to take a little bit of time, but with the new owners in this project, getting some of the old owners out, we're going to be able to accelerate some of that development. So we're going to pull it forward a little bit, a little more near term. And we think we're going to be able to increase the rate of return. You know, we think probably 10 to 20%. So I think it's very possible with the project and the people that we have on board and how we all sort of seeing the development of this project the same way.
I mean, it's a very solid project. I mean, over 90% of the owners are actually industry experts, engineers, geologists, etc., which is really exciting. So all store owners are actually co-owners with the industry professionals, which is quite unique, of course. And when it comes to, and Philip, when it comes back to the Ecuador project, it'll be really exciting. I know you've been working on this for a long time, but it's the first time our storeholders have really heard about the Ecuador project. But I know in the last 2 days of meetings, you explaining why Ecuador might be moved ahead of Peru, simply because it's the cost management of it and the profitability of it. It just makes good business sense to actually do that. So it would be great to be able to bring Robin Slaughter onto a call in the coming weeks, so maybe we can actually speak more about this particular project in, of course, Ecuador, to let our store owners know.
Yeah, absolutely. No, Robin would be pleased to join a call. And I think some of the key points here is that access to existing infrastructure, clean energy input. In the case of Ecuador, and essentially very quickly, I mean, you're talking about where the Pacific and the Atlantic plates collided millions of years ago, which is where you get the Andes, which go all the way to the Rockies in North America. And this is a very highly mineralized zone. This is right on the Inter-American Highway in Ecuador, which basically flows from Colombia to South America. You're right on the back of the power grid. You're very close to the local Pacific port of Guayaquil. There's a lot of reason, and it's a project that Robin has been looking at with his team since the 90s. And there's, you know, very highly mineralized. Another one of the very exciting things about it is that you're talking about horizontal, and And certainly Ryan and Randall, coming from an energy background, understanding that when you're lifting a hydrocarbon from below the surface, maybe 4,000 feet or whatever, or same with rock, if you're pulling rock out of the earth, however many feet it is, versus drilling horizontally into a highly mineralized area, as where these tectonic plates collided all of these millions of years ago, you end up with a great opportunity where you can just basically bore in horizontally, and you're not extracting ore from below the earth, you're bringing it out at the same level. So it's got a lot of very, very exciting potential and possibilities, and certainly, fast to market in terms of coming into production. Of course, a lot of this technology is leading technology that's come out of Australia, working with chemists and metallurgists from Australia that have been in the industry for decades, that have developed a lot of this technology, which to this day really haven't, as I said earlier, been adopted by some of the large mining companies. So they don't adopt the new technologies quickly because they kind of invested in a long-term technology. So we've got some exciting potential here, gentlemen, and to everyone on the call today. So looking forward to sort of unwrapping or unveiling this project moving forward over the next months as we start to bring it to market.
Okay, well, I think that's about it from myself. I think, Philip, thank you for taking the time to be on this call, sharing your knowledge. I look forward to having you on another call. In fact, next week, I think for people on the call today, but we're going to be doing a Spanish call next week, I believe, which I know is a passion of yours as well. And but maybe Ryan and Randall, you'd like to share a bit more, anything about store, all the updates, of course, Ryan. We have the store price increase because the settlement of the asset in Texas. So the store price is going to actually double from what it is right now, and that's going to be happening on the weekend, correct?
Yeah, that's right. Around the 15th, I think, is what we announced. So we're going to keep it in and around that date, subject to IT movements around, of course, and deployment on the site. But that's it. Yeah, the project's moved forward, and we're moving to a point where we've got to make that adjustment. There's still tremendous upside, of course, for the token holders because and just in the asset that we bought, but we need to reward the ones that have taken and brought us to this point. And so that's why we're doing it. But of course, this is just foundational asset, one of the smaller assets. And now we're moving into some more, of course, high growth and some real projects that do good around the world and are highly profitable. So real exciting, have a lot of things to move forward to. We're just getting started, as we always say, but a lot to come.
Yes, and one question that's coming, which is quite a common question, of course, how do we set the price? Do we wake up one morning and think, oh, store price should be this? It's a bit more scientific than that, isn't it, Ryan? I mean, we're not talking about one of these air tokens or one of these .com pump and dump type concepts. This is based on a balance sheet. This is based on an asset valuation, correct?
Sure. So it's not, in this case, because this is our first, well, I should say our first asset. We did make a small acquisition a few months ago, but so yeah, correct. So we take the net asset value, right? So the total, what we call NAV, and we take the total number of tokens on issue up to this point in time, and we sort of balance that up to sort of tie to the asset value of the company, so it's in line, right? And we still leave enough room and margin in there between market value and where we price the NAV. So the NAV is actually a discount to market. So if when the price goes up on the 15th, when you buy, you're still buying it at a discount to market value. So you're still getting a lot of value for everything that's been created to that point in time. But remember, it's all about risk, right? Because 6 months ago, we didn't have a website. We had no assets in the company. And this was an idea on our first version of the white paper. Now we're already kind of past our first phase. We've acquired our first, fantastic asset. And of course, we're getting a lot more traction in the market, and now we're developing some of our more high growth assets in the company. So for that, we have to reward everyone who's gotten in prior to that, so we can make that adjustment to balance up the value of the company relative to the price.
And that's a very important point for people to really understand and grasp, because you're earning something real here. I mean, most tokens on the blockchain, you've got to ask yourself what you're actually owning. What's their underlying utility? What's the underlying asset? Here you have real tangible assets, income generating assets, of course, which are going to be expand in value. And secondly, you actually have a document drafted by a lawyer in Houston, Texas. In fact, he said by us settling on these recent assets, we're probably in the top 5% of STOs or equity tokens, because most 95% of them own nothing. So it's very special. So you do have something tangible here. Your document in your member account office, your PPM, private placement memorandum, it's a tangible document which you signed and acknowledged. That gives you true ownership in Source Rock Energy Partners, a US company which owns the assets that we're speaking about here. So it's really exciting. For me, that's it. I want to thank everyone for joining us on this call. Claudia, I want to thank you for hosting the call and setting this up, and we look forward to our call next week for the Spanish market, of course, and the forthcoming call over the coming weeks.
Bill, I still have a question for Philip here. Hi, Philip.
Hi.
Philip, there's a question from a fellow Panamanian coming for you.
Okay.
I may have introduced him to you, Paul. Paul de Janon. Paul is actually asking, what projected profit margin do you see basically in the Ecuador project? Do you have any idea?
Well, Ecuador requires some very strategic planning, but we're talking a resource that's got a 43101. And 43101 is kind of like an independent audit that you'd have on your financials for a public company from a PricewaterhouseCoopers or KPMG. So 43101 is an independent company that will come and look at the mineralization area and give a report on what they think is there. And this is called proven probable, or could be implied and probable, and so on. So we're talking in this area of mineralization that we aim to take control anywhere from 1 million to 7 million ounces of gold, depending on how the deal structure would work. So you go and run the numbers on that, you're talking a multi-billion-dollar company over time. This doesn't happen overnight, and certainly, part of it is securing the actual mineralized areas, which means speaking to, obviously, and one of the very exciting things about this is the actual general manager of the property that we're working on here was just appointed by the Ecuadorian government to be the Minister of Mines. Now, he's not taken the position, but this is the level of the kind of people we're talking about. Latin America, of course, is always political, and you've got to circumnavigate that. But we're speaking about a hugely highly mineralized area with massive profitability moving forward. And it's a matter of, again, as we discussed earlier, motivating. And one of the great things about these kind of areas is motivating the past resource, which is what we talked about with the tailings. You take the old tailings, reprocess with this hydrometallurgic process. And so, yeah, we millions of ounces, which is, what billion-dollar companies are built on. But this all takes time.
That's awesome, Philip. Actually, I don't know if you know or knew, we actually have a team building in Cerro de Pasco as well as in Ecuador.
Really?
So,
really?
Yeah.
Wow.
Yeah.
I did not know that. That's very exciting.
And they're aware of the project too, Philip, aren't they, Claudia?
Sorry?
They're aware of the project, aren't they? What Philip speaks about.
They got involved, and they want to listen. They want a Spanish webcast. Obviously, you're speaking Spanish, because they are very much interested, because they joined because of that particular project in Cerro de Pasco.
Wow.
Yeah. So they're actually living in those areas, and they're super excited.
Oh. Yeah, no, it's an incredible story. Cerro de Pasco is one of the shames of mineral recovery of the last 600 years, and it's a fitting example of how we should never approach this kind of business. So people can Google it on YouTube. You can just see the vast devastation of this area, young children with huge mercury and lead levels in their blood and so on. So So no, that's exciting, Claudia. Pleased to hear that. That's lovely.
Yeah, well, we're gonna go to a travel there soon. Now, one of the questions also, for just to finish this up, one of the questions we got from one of our customers here and fellow affiliates is about the team. So how does the company actually analyze each department and person in charge of each sector and actually make sure that there is no holes which someone could exploit or cheat store holders of their tokens, etc. Because of course, obviously, the technology is new, and especially on the putting it on the blockchain, it's all online. How can they trust? That is basically the question behind. Any of you gentlemen want to answer that?
Yeah, I'll touch on it, and then probably Ryan will jump on as well. Well, first of all, each person right now, each store owner right now, of course, is registering their Ethereum wallets. Ethereum wallets is actually a wallet on the blockchain, transparent blockchain. So you'll get your registration there. Store is regulated in the Cayman Islands, so it's a fully regulated equity token. And thirdly, in one respect, is you actually have a draft document over and beyond not just the blockchain token. As I just spoke about before, you have a fully legalized document called the private placement memorandum, that when you sign that, you acknowledge the risks, of course, but you're also acknowledging that you have ownership. You have actually ownership in Source Rock Energy Partners, which owns the assets that's underlying to Store, which is truly unique. And I would be bold enough to say that probably 95% of what tokens are out there don't have that. They have the token, but they don't give you, I would say, and maybe Ryan wants to correct me on that if I'm wrong, they don't give you a legal binding document to giving you ownership to the underlying utility or assets behind that token.
That is exactly right, Bill. And in fact, one of the biggest things about most of the tokens that are out there, they are designed to detach the investor from the investment, because there is historically, historically going back 2 years around ICOs, there was no talk about equity-backed tokens or security-backed tokens. This is all very, very new. And so what we're doing, it's not cutting edge. We're just pulling it into a more traditional style structure, which is the shareholding structure, right? We're giving you shareholding, but we're doing it through a token, which is modern technology on the Ethereum blockchain, which gives us more flexibility on the back end. But sort of back to the question from Claudia, is around trust, right? Here we are, we've exposed our entire team, our background, essentially their history. And so we have a high reputation. If you look at everybody that's on our board, and the board is really what supports corporate governance, correct? So we have a strict corporate governance policy, very much like we had when we ran our public company, because we have a responsibility. For every token we sell, for every dollar we take in, we abide by particular policies. So it's not one individual that makes all these decisions. It's the decision of the executive management team, along with the decision of its advisors and independent directors that also sort of validate, because again, their name and their reputation and their code of ethics is on the line. So we take all that very seriously. So no, Bill, you nailed it. And so the only other side that I wanted to mention was around corporate governance, and we talked about that quite extensively. So hopefully that answers the question.
Thank you, Ryan. Yes, that hopefully answers the question. So we will hear the feedback from our audience. Now, obviously, it does. Nabil actually just said, yes, it does. So then there's obviously a lot of questions regarding United States. I mean, we don't want to really go into further, but today, I believe, I don't know, do you have any updates, thing which you can tell our United States citizens, which of course we have a lot of them, and longing to get involved into any of those projects?
At the end of the month, I will be traveling to Orange County, California. I'll be meeting with a group that is sort of one of the greatest pioneers in security token offerings. They love what we're doing, and they love the fact that we have executed. And Bill, you brought up the stat that it's funny because even in the ICOs, you're right, 90-something% of the ICOs failed. And then came this new thing that was going to save everybody, which was security token offerings, equity token offerings, where you actually own equity in these assets. But only 5% of them actually own assets. And so we're going to be in that top 5%, which is, I think, why we're getting so much exposure with some of these companies. They want to actually take the product and make an offering for United States citizens. Now, I'm not certain under which exemptions that will be registered with the SEC. You know, there are a bunch of different exemptions, and sometimes you can get non-accredited investors to qualify. So it will just depend on the lawyer's definitions of what we're doing that will determine if it's going to be available for all U.S. citizens. So anyway, stay tuned. Obviously, we're working on it. It's very important to us. The U.S. is a huge market. We do a lot here in the U.S., so it just makes perfect sense. So we hope we can.
Thank you, Ryan. That's really great. And of course, now to finish this webinar, thank you all for being here. We have some announcements to do, and that is we do have an upcoming event is in Birmingham. Philip, if you are around, it would be great to have you. But I know that Ryan, maybe Randall is coming. It's on the 6th of July. It's going to be in Birmingham, and we have a great team working on it. We have John Bowen there. We have obviously all the guys, Shaquille and his team, Shazad, there's many Shazads. We do have obviously Sean, Mirel, great job they're doing, Karen, everybody who is really working on pulling this event together in Birmingham on the 6th of July. We will be there. Then we're going to have also an upcoming tour to Australia. So we're going to be the first weekend that's going to be on the Gold Coast. So if you're there, and then this weekend, Philip, we are at your place where your father, I believe, was born, wasn't he? In Kenya. Are you coming with us?
Yeah.
Are you coming?
I cannot, unfortunately. Yeah, I have to fly back to Central America, but I want to be there for the next trip. So Bill's keeping me posted on the Kenya dates.
Promise?
And we did speak about Birmingham. Philip, as people know, he's often a speaker at the World Gold Council, and there's one coming up in London in the near future, but the dates aren't confirmed for that. So he may be a possibility, but he cannot confirm that right now. But he certainly said he'd love to be at our event, so that was possible.
Correct.
So, Claudia, I think it's on the hour. We should wind it up.
Thank you. Yes. Again, we appreciate everybody for coming on board. I mean, I know you have a busy schedule. We have a lot of followers everywhere and around the world. They're really excited. They're all saying here, thank you, brilliant webinar. And some people say I'm born in Kenya too, so we do certainly have some here. Yes. So thank you, everybody, tonight. So Philip, all the people from Cerro de Pasco, Ecuador, from Nicaragua. We have people here from Argentina, Paraguay, Uruguay. So they're all looking forward to have you speak very soon to them in Spanish.
Claro que sí.
And of course, everybody's looking forward to have Ryan and Randall, hopefully, in the Birmingham event together with Bill and myself. So thank you so much, and have all a brilliant evening and all rest. Or good morning.
Thank you, Philip. Thanks, Ryan. Thanks, Randall. Thanks, Claudia. Thank you, everyone.
Thank you, everyone. Good to see you.